Today is Tuesday, June 23rd, 2026, and this is Sliced, what our price discovery work with TransEnergy Global revealed. A few months ago, we announced our exciting new partnership with TransEnergy Global to undertake one of the first structured market intelligence and price discovery analyses for energy transition credits, or ETCs. Our goal was simple: build a defensible, evidence-based case for what ETCs are worth and why. That work is now complete, and we're pleased to share the headline findings here. What we set out to do: TransEnergy Global's approach focuses on permanence avoidance of greenhouse gas emissions at the source, securing the legal sterilization of thermal coal reserves with mineral owners committing not to mine for 100 years, so the avoided emissions are permanent rather than temporary or reversible. A portion of the carbon credit revenues is reinvested into renewable energy, biodiversity restoration, and community programs, linking avoided emissions directly to measurable transition outcomes. But ETCs are a new instrument with no historical trades and no established pricing benchmarks. And TransEnergy Global needs to engage buyers and investors with credible answers to an obvious question: what is this worth? Gordian Strategies built the analytical scaffolding, drawing on over 50 research sources, data from rating agencies including Silvera, B0, and MSCI, and comparable transaction analysis to produce a defensible price discovery framework. What we found: the single most important finding from the report is this: the carbon market has structurally shifted away from volume and toward quality. That shift creates exactly the conditions in which a high-integrity, new instrument, like an ETC, could command a meaningful premium. High-integrity credits are now trading at up to 4 times the price of lower-quality supply. Sophisticated buyers are actively filtering out lower-integrity supply from their procurement pipelines. A structural supply deficit is emerging at the top end of the market, precisely because credible, large-scale, high-integrity projects are difficult to develop and slow to come to market. ETCs, if executed with the integrity that TransEnergy Global is designing forward, could enter directly into that supply-constrained premium tier. Comparable markets support this picture. Early market transactions for high-integrity credits have demonstrated pricing multiples significantly above standard carbon credit benchmarks, in some cases exceeding 3 to 4 times. Our analysis positions ETCs within that premium segment of the voluntary carbon market, with final price discovery to be established through early transactions and strategic offtake agreements. Importantly, because no publicly disclosed ECT trades yet exist, those initial issuances will themselves function as market-defining price discovery events, setting early benchmarks for what comes after. Equally important is what drives that potential premium. Our report identified 4 key integrity determinants that directly translate into pricing power. 1. Independent credit ratings of BBB or above. 2. Conservative leakage treatment in the methodology. 3. Strong governance and control structures. And 4. Verified co-benefits, particularly those tied to just transition outcome. These are not supplementary features. They are, as the report puts it, the pricing determinants. Why it matters: it's worth saying something about the process itself, not just the outputs. Price discovery in a nascent market is as much a credibility exercise as an analytical one. The value of this work was in demonstrating publicly and transparently that TransEnergy Global is approaching this market with rigor, that it understands what buyers and investors need to see, and that it is willing to do the analytical work before asking the market to take a leap of faith. That is how we believe all emerging carbon asset classes should be developed. The voluntary carbon market's credibility challenges of recent years were not fundamentally a methodology problem or a registry problem, but instead were a market design problem, rooted in the race to issue credits before the frameworks to validate them were ready. TransEnergy Global and Gordian Strategies set out to do the opposite: build the intellectual foundation first, so that the commercial architecture can stand on solid ground. Carbon markets have a long history of instruments that looked promising on paper and struggled at the point of transaction. The real test for ETCs, as for any new credit class, will come when the first deals are negotiated and the first credits change hands. What this work does is make sure that TransEnergy Global enters that moment grounded in evidence, aligned with buyer expectations, and with a defensible valuation framework rather than guesswork. That's the foundation. What gets built on it is still to be written, and we're glad to have played a role in laying it.